You're listening to Southeast Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Challenge us at Wexford Insurances 0818 31 30 30.
My first guest this morning is David Maher of Wexford Financial Services. David, you joined me on the show a number of weeks ago, and since then I've received a lot of emails regarding financial protection for business owners. I'd like to talk to you about business protection, commonly referred to as key person insurance. What exactly is meant by this term?
Key person involves where a business may have a key member of staff. Now, take the example, say, of a top performing salesperson who consistently over a few years has brought in, valuable income or turnover into the company. If that person were to die, the company would be at a loss of profits. So essentially the company is in a position to take out a life insurance policy to cover maybe 2 to 3 years' earnings of that key person. In the event of that person's death, then they can use that to replace profits, but also to train and recruit a new salesperson to fill the shoes, if you like, of the key person. That's one. Another area of business insurance that we deal a lot with is called co-director insurance or partnership insurance. What this involves is, let's take a company who has 4 directors with an equal shareholding, we'll say 25% each. They put a value on the business at maybe 2 million, so each shareholding is worth 500,000. Now, this company can very easily put a legal agreement into place in the company that should one of those shareholders die, that the spouse of that shareholder will receive fair value for their shareholding. Where do they get the money to buy out the shareholding? Well, it comes from a life assurance contract, because the company are entitled to take out 4 life assurance policies of 500,000 each on each of those directors. And in the event of their death, they simply pay it out and the shareholding is bought out. And it's a win-win on both counts, because the spouse of the deceased shareholder receives fair value for their shareholding, and also the company then can continue on with the correct ownership that they want, so you don't have an outsider buying into the company, or indeed perhaps a spouse coming on board who doesn't have the requisite skills. And just to finish on that point, recent studies have shown that, say, a company that would have 4 shareholders, typically there's a 66% chance of one of those shareholders dying before age 65. And it's very, very inexpensive to put this into place. I've run some quotes to show that, say, 4 directors, 2 males, 2 females, for cover for 10 years, for between 40 and 45, you're talking about an annual cost to the company of roughly about 2,000 for 2 million's worth of cover. I think if you work that out, something like 0.1% is the cost versus the sum assured.
So Dave, what typically is the process for a company to go down the road of co-director insurance?
The co-director insurance, really our side of it is putting in place the life assurance that underpins the legal agreement. But typically what you would have is a valuation. Number 1 is put in the company that all shareholders agree upon. They then sit down at a board meeting and record the fact that they want to put an agreement in place. They may consult their solicitors. We always recommend that, where it's a legal agreement with what their plans are. And once they've worked out the valuation, which we can give assistance to, we then put the life assurance contracts in place. So to take the mystique out of it, if you like, simply what it is, it's a life assurance contract that just underpins a legal agreement. So from our point of view, once we've got clarity on the value of the business, we can work out the sum assured, and then we put a life cover policy in place for each director that requires it.
Dave, I have one question for you in relation to the key man insurance, in relation to that top earning salesperson you referred to. In the event of their death, there's a payout, which is really a loss of profits cover for the company. How is the premium calculated by the insurers in that regard? Dave, I know that one of the main reasons people don't ever become self-employed is that they want stability with income, and they want to know that there's going to be a paycheck there at the end of every single week. Now, for those that have become self-employed, I know that there is a policy in place called income protection that they can take out, that in the event of an accident or an illness, they are guaranteed an income after that period. Tell me a bit about how that works.
This area of insurance I'd actually break into kind of 2, with income protection plans and income assistance plans, and I'll explain the difference. An income protection plan, sometimes that name is bandied about a bit too often to cover all types of protection insurance related to earnings. And what I mean by this is that a proper income protection plan should enable you to cover up to 75% of your earnings. Okay, and it should cover you that if you're not able to do your own job, which is very important, that it will pay you that 75% of your earnings up to whatever the end date in the plan is, which may be 55, 60 or 65, and that's an end date you've chosen. So that's very important, because you could have a 40-year-old who might cover themselves for 35,000 per annum, and if they were to go out sick over a 25-year period, you're talking close up to a million's worth of cover. Now, the income assistance type plan is, sometimes I get people, it never ceases to amaze me, because often I speak to self-employed guys and they tell me they have a plan in place already, an income protection plan, and I ask them, okay, what does it cover? And they tell me a certain amount. I said, how quickly does it pay you? They might tell me a certain time frame, and I say, how long will it pay you out? And they're not able to often to tell me that. And when I question for it, they'd often say, refer you to their wife, because they say she looks after that, which is fine. But when I speak to them, I find that their cover is completely inadequate, and it's not what they expected it to be. So often what I call an income assistance plan is more like a personal accident plan that will maybe pay you only for tops for a year or 6 months. So there's a big difference out there, and it's worth exploring further.
David, what impact does occupation have on the cost of income protection?
Well, occupation is a big determining factor on the cost of income protection. Unlike life assurance, which largely ignores occupation unless somebody's working kind of on oil rigs or fisherman or something like that, income protection looks very closely at the occupation of the individual. So generally speaking, your occupation is classed on a scale of 1 to 4, 1 being the least risky type and 4 being the most risky. And there is cost differential on a scale between the 1 and 4. Now, offhand, I don't know exactly what it is, but it would be up to 100% certainly between 1 and 4. To give you an idea, Karl, like class 1 would be anybody really who's office-based, and you could have an office worker or even an accountant or even a salesperson who's doing kind of under 20,000 kilometres a year out in a car. Class 2 would be a salesperson who is doing over 20,000 kilometres per annum. Class 3 then you're getting into light jobs that involve a lot of light manual labour. You could have maybe a foreman there doing largely supervisory work, and then class 4 would be your bricklayer type occupation. And there would be some classes that would not be covered. Farmers do find it hard to get this type of cover, and certainly hauliers would too.
Dave, how broad is the cover in relation to illness under the income protection policy?
Well, cover with an income protection plan, Karl, is extremely broad. It's probably the top plan out there for covering illness, and the reason being is that it covers everything, be it stress to back pain to any illness like cancer, any serious illness. But the most important thing to note is that the wording of the policy, there is no set list of illnesses that you have to be diagnosed with in order to receive a payout. And this is very important, because the wording of the policy say that it will pay you the percentage of your income if you're not able to do your own job based on any illness preventing you from doing it. And this is very valuable cover to have. And in fact, industry studies show that up to 50% of claims paid out in a proper income protection plan would not be met in some other traditional forms of serious illness insurance cover. And that's because those 50% of claims relate to stress and they relate to back injuries. Another extremely valuable benefit with an income protection plan, a good income protection plan, is that where you have a claimant who might have been, for argument's sake, a dentist, and they're out for 2 or 3 years, and that person would like to get back into the workforce again. They don't want to be out claiming long term, but maybe they feel they can't return to the same industry. Oftentimes, the insurance company will pay for a program of re-education for that person. And not only that, let's say they went back as a web designer and their income had dropped by up to 50%. For a certain period of time, the insurance company will also pay a 50% reduced proportionate benefit to help the claimant in their new job until they're fully settled.
Dave, in relation to college fees, there's an awful lot of coverage after being given to this area over the last 12 months in the media that they're going to be reintroduced, certainly over the course of the next few years. From your experience in dealing with business people across County Wexford, do you think that they're well geared for the reintroduction of college fees? You know, a figure of €10,000 per annum is the cost of sending somebody to college here today in Ireland. Do you think that business people have made allowances in relation to college fees and the cost of sending kids to college in the future?
Very good question, Karl. And yes, unfortunately, it does look very likely that college fees are going to be reintroduced. It's only really a case of finding out how much they're going to be, I would say. First thing to point out, of course, is business people or family people as well, like myself. I mean, I've 3 kids aged 13, 7 and 6. And of course I have aspirations for them to go on to third level. Many business people I meet are caught up to the day-to-day running of their business, which is fair enough. And oftentimes they're not prepared, financially prepared for their children going off to college. You're right, a recent study that was carried out by the Irish Times, and indeed an annual study that's carried out by DIT, cost of living for students, shows that it's now costing to send a child off to university. It's costing roughly about between 8 and 10,000 per annum. So over a 4-year degree course, you're talking about roughly about 40,000 to send them there. So how do you meet this cost? Well, you need to plan early, quite frankly. And I mean, figures we're looking at, if you put away roughly 140 a month over a space of about 18 years, you can kind of arrive at those figures. But you need to plan early. Certainly you need to be aware of it, because I do know, and there's a lady I work with, and she won't mind me saying this, but she's trying to put a couple of kids, one daughter through college at the moment, and she's another approaching college, and she had a plan in place, but she said herself she wished she put more in over the years. But at least she had something in place. And that's the message we'd put out there. We know businesses are under stress. We know family households are under strain. And they're trying to prioritise costs between everything, outgoings for their kids and even insurance costs. But what we would say is try and put something in place. Try and put some form of a savings plan in place, because the time for your child going to college, it will come around quicker than you'll realise. And that's been the feedback we've got from a lot of our own clients.
Well, David, it's been a very informative interview. Many thanks for coming in this morning, and I wish you continued success with Wexford Financial Services.
You're listening to South East Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Think Wexford Insurances for your business insurance.